The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. If you Friday each market day at the same number that you heard Steve Rose, 2 great hours just previous with terrific information and technical veracity. So we are looking at a Dow right now at 46, up 46 at 15,237. S&P is down 3 at 1681. You got the comp index down 18 because of Apple. Apple is taking it on the chin. Is it the chin? Yep, it's the chin. Down 28 at 465. You've got gold down just $2 at $13.62. Silver's up a little bit at 13 cents at $23.16. You've got crude oil at about 107.43. High-grade copper is now bouncing up $1.50. Unbelievable. Up and down between the 3.27 area. 3.26, and we've got bonds up 230 seconds at 128.28, and the dollar is down 24.30 seconds. So what we want to do is, and congratulations, wow, daily winners for the contest is that the virtual trading contest, virtual trading competition. Daily winners for yesterday at the close with Kay Latham, T. Schmitz, K. Frieden, J. Donaldson, and R. Lawson. Hey, put your trades on. Remember, if you don't put a trade on, you don't have a chance of winning. But some of these are spectacular wins. Really, really understanding the whole concept of the methodology involved within the trading systems that you can do on the Nadex platform, especially the ones using Daryl's fabulous technical software program. So we've got first place. We're $28,794 profit for the first winner. That is really good. Oh, those are the daily winners. But the current overall leader is XVang. That's what it is. Oh man, look at that. $28,794 profit. Second place is N Gill, $27,900. W Bar, $17,000. Third place, fabulous, absolutely spectacular. I love that. That is really good to see. So. And that was the leaderboard. Oh, that was the leaderboard on the 10th. The leaderboard on the 9th also had fabulous winners. And Gill. So they say, N Gill's doing consistently. He was up in there. He was number 1 on the 9th and number 2 on the 10th. Whoa, love that. Okay, well, let's get to the markets here. Dow's now trying to make a break to the upside. This is very important. Let me just get the charts that you're looking at. If you're looking at Tiger TV, and let me just move this over so that you can actually see it. Oh, there you go. If you're looking at Tiger TV, what you will be looking at right now is a chart of the E-mini. This is the December contract of the E-mini. And most importantly about this particular contract is you want to be looking at it and saying to yourself, aha, there's a cup formation, lovely cup formation forming in the daily chart. The stochastics at 86%. Finally, it got over the 80% level. And now there's a potential squash between the MACD and the slow stochastic. That means the stochastic's really close to the MACD. That's going to give added incentive. Now, I want to drag the 120-minute chart. Yep, there it is. 120-minute chart up. And I want to show you that what you've got here is that the technicals, let me make it even bigger. Look at this up channel that I've drawn. Within the up channel, there's something that I call the inside track. This is something that I like to teach and I show in my CD Introducing the Chapman Wave Methodology. Talk about it a lot. And you will see that that green line there says that if the S&P, the December future, is able to break above 1677.25, doesn't say when, but it would imply that it has to be fairly soon within, it's a 120-minute chart, should be within a day or two, then all of a sudden the resistance level takes you from, depending when it happens, of course, from the 1677, let's call it 1678 level, all the way up to 1682 into that inside track, the track that I call, type it in here, The Chapman wave inside track cell repellent zone. What does that mean? Well, it's very simple. It means on a visual basis, all you need to be doing is looking at the resistance that repelled the price consistently over the period from September, the beginning of September, all the way through until yesterday's highs, or this morning, so early this morning, no, yesterday's highs. And now you've got a rectangle pattern. And what I talk about when I discuss rectangle patterns is that rectangle formations can last even though you think it's going to break out on the upside, even though you think it's going to break down on the downside. They can last for quite a while. And because of that, it means that this particular E-mini has gone 1, 2, 3, 4, 5, 6, 7. That's 14 hours in a sideways motion. It hasn't done that for a very long time. In fact, you could go even further. You can go all the way back to the lows of 1667 and say that it's gone 14, about 16. No, that would be 14, but 20 to 22 hours in the sideways motion. So a break above on the upside says that the technicals need to confirm it. Otherwise, it's just going to be a mere repellent line, and that 67.25-ish area on the E-minis will become a repellent, and then you think it's going to break out instead, it goes back down, comes back down to the lower side, and doesn't break that. So a decisive break means you need to go at least 2 points close, at least 2 points above. That would be 1679 to 1670. On the downside, you'd have to break, and I would have to say you'd have to break under 1675 to 1673. So I just want you to go through that just to discuss kind of the way I use proprietary techniques that I've developed over the years. And oops, didn't mean to do that. And that's one of them. That rectangle formation as well as the inside track repellent zone. Now, there's something else that's forming. You see this V-shaped pattern in the E-minis weekly chart? See the way the lines are expanding? This is the opposite of the falling axe formation. And what that says, that at a certain point, if this major uptrend support line, which is now at, well, depending on which day, it's a weekly chart, let's call it on a weekly basis, 1628. If 1628 gets taken out, the major level of 1618, that is absolutely imperative to hold at any point. On the upside, if there's a break above 1698.50, I have to consider that we are done with the consolidation, and that's going to be brand new leg B. I could call it leg G, but it is so unusual to have it. And that would imply that we've started a new trend line, and that trend line on the E-mini says right there that there's a target to the upside, depends when, of course it's a rising trend line, of 722. So I wanted to just give you a sense of what I'm looking at, why I'm looking at it. And now let's just go to something else that I think is quite important. If you are looking, I have a question here, and I'll get to it, an email question. I'll get to that very shortly. But if you're looking at let's go through each index. Since this is just really the middle of the week, we don't know what the Friday close is going to be. This candle right here is really important. Why? Because it is extended in a pattern that I was showing subscribers this morning in my newsletter. If there was a strong candle today, it would begin to measure, and this is bar number 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Sorry, bar number 10. It would start to match the takeoff from the 14,551 level back in June of this year in the daily chart, and that's the pattern I'm looking at. Now, I'd expected that by the close today, we should see some kind of a doji candle, a fairly narrow close. With Apple dragging the Qs down like this, now let me go back to the charts. this action in the Dow is really very positive. You have to consider that's positive. One of the reasons why I wanted to pick up a stock yesterday for my subscribers on a pullback, a very opportune pullback, in one of the least loved stocks for years and years and years, because I think it got its little comeuppance yesterday, and now it's going to show those people that gave it the comeuppance exactly what it is worth. And I think that what it's worth is a lot more than it's been trading at over the last few days. So hopefully this is a starter position, and we can add to it as one of the low price stocks that I also like to pick up on the long side. Not afraid to go to $400 stocks, not afraid to go to $1 stocks. It just depends on the chart formation. So we're going to see if that one works out. Now, there's something else that's really important. In the support levels, 15,044 is the 9-period exponential moving average on the Dow. You see that the Dow is only halfway. It's not even halfway. Let me just get a little fib. Let me just do this right there. Ping to ping. Yeah, it's just a fraction over halfway in its retracement. The weekly chart says, hey, just be a little careful. You could be making some kind of head and shoulders top here. So each index individually is what you need to look at. Now look at this. The Dow is up 0.39% today. The S&P is down 0.10%. So once again, you've got a divergence between indexes, a divergence between stocks. And what I said about the Dow is this is the bar that is really important to close above that ugly bar of the 15th of August, above 15,332.71, even by 1 penny, says to me that is positive action, which means that the S&P, SPX.X, going up that 80 points or so would be about 8 points on the S&P. So far, we've got a potential peak B if there's no new high, but it tackled and broke and closed above that very ugly bar. It actually filled 1695.52, 1684.09. So it hasn't filled in the gap, but it's close. So did I say that correct? 1684.83. 1684.09. He missed it by less than $1. So the S&P, same kind of chart pattern as the Dow if you look at it at a glance, but if you look at it closer, that decline from the 1709.67 level came down to 1639, a much shallower decline. And that says, looking at what's going on here, oh, that's the 120-minute chart. Let me just get rid of that 120-minute chart. I wanted to put it down there. The monthly chart is still at peak D if there's no new high in September above 1709.67. If the volatility index, which is trading at 14.27, let me get to that right now because it really is timely to do it right now. If that volatility index continues falling, it is talking about buying pressure, and that buying pressure will constantly support any failures in the market as long as the volatility index does not pop up above $15.60 to $16.20. The moment it starts trading back there, this market will start to feel some volatility to the downside. I'll continue along this line, but I would love for you to call at 877-927-664.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we will go to our first caller. We've got Dale in the Cayman Islands. Oh, that always sounds so romantic. How are you doing, Dale?
Very good. How are you doing, Basil?
Very well, thank you. So you would like to look at?
Well, I know you often talk about your 4 horsemen of the Dow.
Yes.
I sort of have my 4 horsemen that I watch of the Qs, which would be LinkedIn, Facebook, Netflix, and Yelp at the moment. They seem to be the big momentum stocks that are moving up. I'd like for your just general opinion on them, in particular Facebook. But and I'm wondering if you could touch on them sometimes in the future, because I listen to you regularly, and these stocks seem to have a lot of momentum lately and seem to be pushing, seem to be a good barometer of what the Qs are going to do.
I like very much your 4 horsemen. Now, I'm going to consider them the new leaders. They're the old leaders, the Googles, the Apples, the Baidus. Well, Baidu's still doing very well. The Amazons, etc. Priceline. But I think you've nailed the 4 that, in fact, in my newsletter this morning, if I can just find it here, I believe I wanted to, I'm sure I did. Let me just see. I even mentioned what I considered Buy America. That's what I'm thinking. I've been talking about it for quite some time. Done it periodically, but haven't stayed with it. I changed it at the last minute. In fact, I do have Facebook as over the coming weeks our Buy America theme will predominate, and I mentioned a whole bunch of stocks that I consider American stocks, even though some of them have manufacturing, all that overseas. But definitely, I think it was yesterday I might have mentioned LinkedIn and Facebook. I got it here, Facebook. I consider that to be part of the new, not the new generation of leadership, because we don't know yet whether they're going to be the actual generation of leadership. But at least in this phase, I think that's part of the rotational aspect that I keep talking about. So now, if we go to Facebook, Facebook is at peak D with a high-level consolidation. FB is the symbol at 44.28, up 68 cents, walking the 9-period moving average. The MACD is flat. What the MACD says, it maintains the last signal. If there's a flat, that means the stochastic and the fast-moving average and the slow-moving average. Anyone looking at the charts, it means, I'll move it over a little bit. It means that as long as the fast-moving average is holding above the slow-moving average, the green over the red in this case, that is a positive, maintaining the last signal. That's number one. Number two is the stochastics at 89%. It is turning down. The MACD, the on-balance volume is dipping a little bit. I know Steve loves to use the RSI. RSI is pulling back a little bit. Now, the 9-period moving average at 42.81 is the key support. A high-level consolidation means that it might take time, but not price. I'm just a little cautious here on Facebook, because the gains, as you can see in this last phase, while they've been fabulous, going from the 36 area up to the high of 44.79, that's nothing to sneeze at. It's been a stair-step move, and it's starting to struggle a little bit. So today's candle is very positive. I'm suspecting that Facebook is getting really close to some kind of a pullback. Now, there was a gap, and I'm sure you're totally aware of this, at 26.53, the high of the 24th of July, and at 32.75, the low of the 25th of July, that huge gap. At some point, it will become a focal point, but it isn't right now. My first focal point on the downside is a little doji candle on a more serious pullback, the doji candle of the 21st of August between 38.85 and 38.15, so in the 38s. That would be my key level of support, because if it breaks down there, it'll obviously want to test the low of the 15th at 36.02. So now that says, what is the upside potential? At this particular moment, I must admit, if I do a very simple technique of just drawing a channel and then doing this right here one more time, the channel says it has the possibility to go towards the 45.80 to the 46.30 level, about another 2 points, another 5%. But it's the monthly chart, the weekly chart that's saying to me, be a little careful here, because the doji that's forming on this weekly candle right now is saying shorter term, there should be, doesn't have to be, but there should be a pullback, and that pullback could take it towards the 41 to the 40 area. So I'll do one at a time, because I would like to do that as well. Most importantly, the round number high of 45 that was at the opening month, 44.79 is a high. So we'll be back talking to Dale, the Cayman Islands.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and we are on with Dale. Let's see. What's the question here? Yeah, we're down in the Cayman Islands. So, Dale, I'm looking at each one individually, and it's really important right at this particular time. Why? Because the Dow is actually up 75, and finally the S&P is slightly higher, even with Apple down to 28 points. And the VIX is down at the 14.12 level. So, let's do this. In terms of Netflix, Netflix has made a new high today. It's actually an all-time high. It's made a V-shaped formation. It's fascinating how many charts have made a full comeback. 304.79 was the high in 2011 in July. Netflix comes down. NFLX is the symbol. Hits the 200-period exponential moving average at 52.81 and zooms up, and it's made a new recovery high today, an all-time high today. Now, in the weekly chart, I'm calling this E. I'm calling it E because so far it makes sense to call it E. In the daily chart, it's leg D. Stochastics at 89%. MACD is still very good. It's acting very well. The support is at 295. It's at 308 right now. So 295 to 289 would be key support for Netflix. If Netflix breaks underneath that at any time in the next 2 to 3 weeks, that says 273 is the 200 period, is the 9-period moving average in the weekly. Upside potential is very difficult to say right now, but I would put it almost in the same category that I can see upside, but at this point I would probably put it at about 10 10 to 12 points, maybe 15, and then I think it's going to get very toppy. So it's very close, and in the 120-minute chart, I'll never finish that. So if I run through those, we did Facebook, LinkedIn. LinkedIn is making a potential 120-minute peak G, a potential peak F/C in the daily. Leg D again, but it's slightly over the up channel. That inside track, it's just gone slightly above it. That's a positive, and it says that we've got to watch LinkedIn because it could potentially get to the 251.78. It's down 50 cents. It's really interesting. There's a very mixed performance today between these because what's happening is that some of the Dow stocks are starting to act very well, and one in particular, thank goodness, is the one, well, at this point it's still there, one that we own. Now if I look at the final one, which is, did I do Netflix? So LinkedIn, Facebook, Yelp, invariably go to a leg D. LinkedIn, I think, is already, LinkedIn, LNKD, is already in leg D. It's a little bit more mature than the others. So LinkedIn is the one, they would probably act together, but it's starting to say to me, it's a little toppy. It's struggling a little bit. If you're long, I wouldn't do anything about it. I'd stay long. I would actually take a little bit off if it pops over 25, 54, 61, or even right now. And that money I would try to put back at about 232 if it ever gets there. So if I put this together, I'm impressed at the action of the Qs despite Apple. I've got the stochastic and the daily chart of the QQQ Trust Series is at 91%. That's really positive. The MACD is very strong. The weekly chart is at 86% in the stochastic. The MACD is making another M formation, and the monthly chart is still good. So if I put that together, I have to say that the way I would get any shorter-term sell signal from here would be if two things happen. One is if any pullback starts to see the VIX index, and in the NASDAQ it's VXN, I believe it is. Let me see, I did some work on this last night. Oh, I did the VXO. Yeah, the VXN, if the VXN, which is trading at 14.94, which is really the NASDAQ 100 volatility index, if that starts to climb to about 1650 to 1710, then you'll start to see the Qs start to sustain any pullback. So far, they're acting very, very well. And the four new horsemen that you were talking about are acting very well. One or two are getting a little bit toppy here. So I hope that helps you in your assessment.
Yeah, no, that's great. And that is sort of was my assessment of the general market. Just Facebook, if anyone is interested, Zuckerberg sort of he's having some sort of announcement, or he's doing some sort of meeting today. I think it's at 2 or 15 or something. Really?
Oh, that's interesting. Okay, yeah. We're going to be watching that closely because there's, as I say, there's that up channel that says that if it was to break above 44.79, then we'd be looking at somewhere in the 40. Maybe the 45.50 to the 46.30 area, and that you got to be careful.
The high out of the IPO date was 45, so
correct, round number 45.
It sort of clears that overhead resistance area as well.
And it just needs to do that once, and then it can take a bit of a breather. And a lot of stocks are doing that right now. Hey, thank you for calling, because you brought me into this. I'm going to call them the newbies, the four horsemen of the NASDAQ. Thank you so much for calling, Dale. I appreciate that.
No problem, Basil. Have a great day.
You too. Dan and Cayman Islands. We looked at the Qs. We looked at, in fact, you know what I'll do right now? I'm going to look at there's the NDX 100. Looks very much, whoops. Now, the NDX 100, which the Qs theoretically should be trading the same, hasn't really got the same pattern. 3149.24. 3147.80. Wait, 3149. Yeah, the Qs. This is interesting. So this A to B, this could be E/B. I like what's going on right now. I must say. In fact, we were long the DOG, 100% short the Dow. We've taken a little bit of a profit. Now we're clear. Thank goodness we're starting to add some long positions. We have some long positions already to my newsletter. And we're also looking at shorts. I'm not afraid in this market to go short certain stocks that are showing extensive wear and tear and are just struggling at this particular point. One I've been trying to get for 3 days, just won't get to the price, but it keeps pulling back. So let's do something else. I got an email question from Jim, and the question is SCHB. Schwab, was that? Yeah. SCHB. This is a great one, because here you are finally. It used to be, I remember years and years ago when I started in this business, I would always buy brokerage houses, Merrill Lynch or one of the brokerage houses. Usually it was Merrill, because they were the hot guys. And every time there was a recessionary period with the market pulling back 5 to 7 or more %, I would quickly jump in and I would buy a group. I'd buy a computer stock, usually Prime Computer or one of those, Merrill Lynch. I had my bag, 3, 4, 5 of them, and I would just buy them. And when I got nervous because they made money, and then I started to churn, and I realized that I was starting to give back gains, I knew that I was getting to some kind of a top. I'd pull everything out. I was only in long positions. I'd get out and I'd wait, and I'd get back in. It was a fantastic way of doing things. Very uncomplicated. Now you can make it more complicated. Still exciting, but this is what I need to do. I have to put an up arrow in SCHB, trading at 41.18. This is Charles Schwab, even though it's under the previous high, because the stochastic's at 88%, the MACD is good, and I've got to squash that pattern between the stochastic and the MACD. That says there should be higher prices. But here's the issue. I've got a potential peak. I've got a peak F in the weekly chart. Usually that's a much deeper pullback. Well, the peak E that gave me a down arrow, and this one that gives me that little inverted V, the little hat, says that if there is a new high, I have to cancel that. I have to cancel this F, just like that. Plop. I have to go back and I have to look and say, wait a minute, Dodo, you missed an instant restart. It's your technique that you discuss in your CD, introducing the Chapman wave methodology. And that says, especially with this candle right here, this candle right here, the candle of the weekly of the 28th of June, it says you can start drawing in for the very long term 2 things. One is a base of support right there at 37, between 37 and 37.5, and the new bar that makes the next leg up, if it goes there above 41.58, at 41.59, I will erase both the E, the peak E, and the F. I will do that, and I will call it leg C. And that'll be very positive, because it says you should go to at least a leg D before you can get any kind of a more important sell signal. Okay, so I just wanted to clarify that. Now, the question that was asked, he was talking about in the double cup formation, the inversion is an M pattern. And if, let me just do this. Let me just do it here, because I think it wasn't a very clear. I understand the question, but I'm not sure. This is a pattern that I've been talking about for quite a number of years, that I've been studying. I've got some conclusion to it. Unfortunately, this one almost made it, but it didn't. If there was a move like this in Schwab on the daily, and it had gone somewhere towards the 41.52 level, made the cup formation, went up to, it didn't have to make the new high, but if it did go to the new high, and then made, then let me just draw it as if it was going to be. I'll just use this as a potential example. But you would have needed to have had a price point somewhere there. Okay? Now, that is the inversion, that is the mirror, sideways mirror image of a cup and handle. Not one of my favorites. But in the handle and cup formation, you can often get a very powerful move, because what it's done is it's concluded a move to the upside, and it's concluded a very big digestive phase. If the technicals come in, you should not stall at the previous high of 41.58, but you should take it out. If you do take it out, it has to be taken out decisively. Any pullback cannot go more than just a tad below the previous high, in this case a tad below 41.58, and then very quickly has to go on, and then you're going to get the cup and ladle breakout formation, what I call the Chapman wave cup and ladle, and that says you should go to at least the leg D. So I'll be watching this closely. So Jim, I think I have kind of answered your question, because I don't think you could be looking at the weekly, because these are V-shaped. The V-shaped pattern, now something about the V-shaped pattern is that V-shaped patterns, because they don't take the time to, in the cup formation, you've got an ellipse as it curves to the downside and then takes its time curving to the upside. In a V-shaped formation, it goes straight down and straight up, and because of the momentum of the downward move and the momentum of the upward move, it very often pierces quite decisively the left side high. This is why we often get that Groucho Marx formation. This one went a little bit higher. Now what happens is it pulls back and is trying for a second V. That V says, don't get too carried away, because the resistance could very well be quite simply drawn by just joining the two highs, and what you will start to see is you're getting a rising wedge formation. And a rising wedge formation says that as you're getting closer to the apex, you should have a pretty sharp pullback, not the pullback that the books tell you goes all the way back to the beginning. It just says a pretty sharp pullback. So far, Schwab is acting very well. If you're long Schwab, there is the gap. That gap, part of the gap, should be filled over the coming few days. But in the meantime, I think it's targeting the high of 41.29, 41.40. At that level, we don't know whether it's B or leg C or even D, but that's going to be very important. But the stochastic and the MACD are saying, whoa, fabulous move. 120-minute chart is also, it's now nicely above the 200-period moving average, and you've got a positive crossover with a 9-period over the 200-period. That says, great, there should be a pullback to digest those gains, but so far it's very good action. SCHB, that's what we're looking at. I must double check. Schwab US Broad Market ETF. Oh, that's not Charles Schwab. That's Charles Schwab's US Broad Market ETF. Ha! Well, that's it. Everything I just discussed earlier on, it applies to the broad market. Isn't that interesting? I usually just do the charts, and then I look at the labels, and then I look at the prices. Very interesting. We'll go to Lou in Nashua as soon as we get back. Lou, what did you want to look at just as we're going to the break?
NGV.
Okay, I'll be right back with Lou looking at natural gas.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. I'm just trying to find a chart here that'll explain something. Oh, let's just do that there. What I'm looking at here is that in the contract, I've got the continuous contract here. I've got them on all different time frames. Funnily enough, I don't have the G, I've got the Z. But the 120-minute chart made that prerequisite in the Chapman wave that says if there's a buy signal that goes to buy mode, it should go to at least a D. It did that, and it's pulling back. What it's doing is it's testing the low of 3.517 made on the 6th of September. So that's that. But more importantly, I've got a signal that says there's a peak E made in the daily chart, a peak A made in the weekly chart, and the monthly chart has got that pattern, the same H pattern. Now, what I'm looking at here is that you've been long for a little while, right?
Mm-hmm. Yeah.
Have you taken any profits at all, or are you still staying in the position?
I'm not in the position. I was thinking of getting in.
Oh, okay. All right. Good. So what I'm looking at is this is NG. Let me just do this NG. I just want to go to the Z to see something first. Okay, now let me go to the NG. Oh, I went to the UNG, which is the tracking vehicle for this. And I don't know if you ever trade that. I know you like to use the futures. This is the United States Natural Gas Fund. It's made a peak F. In a peak F, and I just wanted to show this very briefly here. In my CD introducing the Chapman wave methodology, slide 28 shows you what you learn in the methodology. You can use bars. I happen to like candles because the candle just gives you a lot more information. So here it is with the candles, the same chart. But if you just look at the chart, you don't have an idea of anything or what's going on. But if you put the lettering in, look what happens in this particular chart. It goes peak A, B, C, D, and then E and F. F is where, and that exact pattern that you're looking at on this slide, slide 30, which was done way back in, this is back in July of 2005. Same pattern. Patterns always repeat. Look at this pattern. That's exactly what you're looking at here. And I'm going to put a down arrow to say that natural gas, at least in the shorter term, has made a pretty sharp pullback. If natural gas, now I'm going to go to your contract because you're looking at the NGG. So I'm going to do that. And I'm just going to say to you, that's a slightly different contract. This is a slightly different pattern. This has gone A, B, C, and has pulled back. I'm sorry.
NGZ.
NG?
NGZ.
Ah, that's what I want. Okay, good. NGZ is what I'd like to look at. So the NGZ has gone, and this is what I'm going to do for you quickly before we run out of time, is going to peak A, B, C, D, E, F. This is the same thing. So I'm putting a down arrow here, and this one has broken the left side. That's the H pattern that I talk about very often. That says to me, the level that you're going to have, I would not think of a trade until it tests 3.723. 3.75 to 3.723. If it goes under that, that's very negative. If it starts to stabilize, that's where I might consider a position. Why? Because the weekly chart is saying that there's strength that's starting to build. If at any point it can bounce back to 3.85 or 3.86 actually, that'll be really nice action. But I would first wait to see this pullback should stop somewhere around that 370, 372 level. So I'm going to suggest that you hold off. Today's Wednesday. Let's look at it again. If you have a chance, give me a call tomorrow or the next day, and we'll be looking at it. But I would hold off buying again, or at least at this particular point. I think it's building for a much better move. If I look at the long-term contract, I'd be looking at the monthly contract. I think it's starting to build a nice upward move. But let's see how it holds. Give me a call tomorrow again. Thanks for calling, Lou.
Okay,
stay tuned, folks, for Larry Pesavento. I just want to do the Dow before we do anything else. The parameters I'm looking at as we go out are, the Dow 15,332 is an upside target, and the support now is at 15,130. I'll be back tomorrow. Thanks for being here.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.